Well, unless you've had the news switched off for the past 3 months, you probably won't be surprised to hear that there's been a general sell-off in growth equities since the start of the year, driven by the prospect of rising inflation and interest rates, and a war in Ukraine hasn't helped either. As a result, sectors such as tech and biotech have experienced market declines since the start of the year. For global biotech, the index has retreated 22.2% for the March quarter, the second largest quarterly decline in the index's history. In fact, since its peak in mid-February 21, the biotech index is off a whopping 46%, the largest correction in its history. And while we've certainly felt the pressure here at HB Biotech over the past quarter, we're pleased to report that all of our clients are well ahead of the index, net of fees, regardless of their entry point to the biotech market. And our overall outperformance to the 12 months ending March 22 remains high at 18.5%. At HB Biotech, we feel that inflationary pressures, combined with the resulting likelihood of interest rate rises, have already been well and truly priced into current biotech valuations. And while there are currently murmurings of a potential recession as the result of the recent yield curve inversion, it's important to note that healthcare, and biotech in particular, tend to perform well during times of economic downturn, as was the case during the GFC, where biotech index actually increased over this period. In fact, this characteristic of typically low correlation to the overall market is one of the most attractive aspects of the biotech market for an investor seeking true diversification. With the current pullback in the market, we're seeing plenty of buying opportunities for companies with good prospects trading at compelling prices relative to what we consider value. In particular, we're focusing on stocks that have been indiscriminately sold off but have solid balance sheets, making them capable of riding out the current volatility without having to raise further dilutive capital at steep discounts. Considering the extent of the current correction, it's interesting to note that there have never been 2 years of negative returns for the biotech index, and that the years that follow a correction typically exhibit very strong returns. We certainly see the current environment as an attractive entry point, be it to individual stocks or the biotech market in general. And while we don't know the exact date a rebound will occur, or by how much the overall market will move when it does, history has certainly taught us that when the rebound does occur, it's usually rapid.